back. You're watching Buy Now Sell Now on ET Now, and as promised before the break, we've got the management of Happiest Minds joining us on the show to talk about the quarter gone by. And right now, we have Mr. Venkatraman Narayanan, who is the managing director and the CFO of the company. Along with him, we have Mr. Joseph Anantharaju, who is the executive vice chairman and CEO of the product engineering services at Happiest Minds. A very good morning to both of you all. Thank you so much for joining us on ET Now. And let me first begin by asking about the client confidence as well as the demand trends. How are they looking like right now? Also, if you could, if I could add on to it, that would you be sticking to your FY23 revenue growth guidance of 20 to 25%, or is there any chance of an upgrade?
In terms of client confidence, as we mentioned in our release, we see customers continue to be bullish about their digital journey. At the same time, they're looking at the overall spend and the market conditions and trying to make sure they balance out the need to implement digital initiatives versus the overall macroeconomic conditions and make sure that they optimize their spend. And given that we mostly work in the digital space, this has worked to our advantage. So we're not seeing really much of an impact from a customer demand perspective. And therefore, we still hold on to the guidance that we had given from a revenue standpoint.
Yeah, if you look at our growth for the current quarter, it's been quite good comparatively and on a standalone basis. 5.7% growth in constant currency, 5% in dollar terms, and 8+% in rupee terms. So that's testimony to the strong sales engine and the demand situation that we have seen until now.
Narayan, just one more update that I want in terms of operational margins that have dipped slightly on a sequential basis in Q2. But your FY23 EBITDA guidance is at 22 to 24%, like we were talking about. But will we see more margin pressure in the coming couple of quarters?
To this number of 22 to 24% even before what started happening around the world. So it started almost 5-6 quarters back. We have been talking about this margin number of 22 to 24%. And in all fairness, I continue to hold on to it, even though this will be the 10th quarter we are doing a 25% plus margin quarter. So 9 quarters of 5% plus growth and 10th quarter of 25+ percentage of EBITDA margins. But despite that, it's always ideal to be a little bit cautious on the margin front, because some of these things can just happen overnight. It was a demand situation, the supply situation, which gave us all the concern the last 3-4 quarters. Right now, it could be investment that we may need to make in some new areas, given the changed market conditions.
Thank you so much, gentlemen, for joining with us on ET Now this morning.